You are listening to Road to CEO, nothing but in-depth interviews with executives about their journeys as CEO. I'm your host, Will Marlow, and I hope you enjoy the show.
You had this perception among a lot of consultants in search engine optimization that their knowledge was their secret sauce. And if they were to share that openly, it would remove the competitive advantage and the unique value that they added.
I'm here today with the great RAND Fishkin, who needs no introduction, but I'm going to give him one anyway. RAND is a digital marketing pioneer who founded the iconic company Moz back in 2004, when it was actually called SEOMoz, one of the leading software companies for SEO. I believe it reached about 50 million under his leadership. We're going to find out if I'm right about that. He's become one of the marketing industry gurus around all things SEO and has moved on to found and run a company called SparkToro, which we're going to hear all about. As always, here on Road to CEO, we're interested in hearing the stories about a CEO's journey. What was the journey like to becoming CEO? What have they learned along the way? Can't wait to dive into this conversation with RAND. RAND, thank you so much for being here.
Yeah, my pleasure, Will. Thanks for having me.
So I've known about you since your days with Moz. I was running a company shortly after you started Moz. I think that would have been in 2004. Is that right?
So I dropped out of college in 2001 and then essentially started the blog that would become the consulting business SEOMoz in 2003. So yeah, pretty close in terms of timing.
So one of the reasons I am thrilled to be talking to you is because you made a comment, and I think it may have been an offhand comment, and I saw it online, and it really inspired me to do something that I'm doing right now. You said, I was familiar with your work as the CEO of a software company, but you made the comment about how different it is to build a services company and a consulting company versus a software company. And you said, I failed to build a consulting company. And I remember hearing that, thinking how interesting it was. This was when I was just new in business. And I just remember thinking how interesting it was, just the difference between those two types of businesses. And I was starting down the path of services, and it made me really embrace the difference in what I was doing. So then I started really drawing the distinction between services versus software. And it really helped me focus on the things that it really turned me into a CEO that really understood the value of people and a people business, because that's how I think of services businesses, as people-based businesses rather than product-based businesses. In any case, I just wanted to tell you that because it was an interesting way that our paths intersected a little bit. I guess back in the day. So you started that blog that would eventually become a services business. And why don't you tell us about that? How did that start at the beginning?
Yeah, so I started the SEOMoz blog originally because we were a web design company, right? I was building websites for my mom, Jillian, who's my co-founder, for her like small business consulting clients in the Seattle area, dentists, local small banks and credit unions, that kind of stuff. And the web design business was fine. I liked it okay, but it barely paid the bills. We were struggling pretty badly. At one point, we were unable to pay our SEO subcontractors. And so it kind of fell on me to do the work because we had promised it to clients and we needed the money desperately. And so I dove into SEO. This is probably 2002. Insanely frustrating time to try and do SEO, right? The search engines at the time, the market share was pretty spread out. It wasn't just Google like it is today. So all of the search engines were very secretive about how they worked, how they operated.
Yeah.
The industry was also very secretive. So you did not, it was funny, it was sort of pre-content marketing era. And so you had this perception among a lot of consultants in search engine optimization that their knowledge was their secret sauce. And if they were to share that openly, it would remove the competitive advantage and the unique value that they added. And so there was a lot of, even at industry conferences, there was a lot of like wink, wink, nudge, nudge. Those of you in the audience who know how this works, know how this works. The rest of you, I'm not going to say anything. And I got plenty of, I don't know what you want to call it, hate mail, and a lot of people disliking me because SEOMoz, when I started it, the whole concept was I want to open source how SEO works. I want to make it available to anyone and everyone. I don't want anyone to have to struggle the way I did. And the early blog was crap. Well, like, I don't know if you read those posts from like 4 or 5. Just terrible. Like nothing useful, nothing really good, but it's a learning experience, right?
That's right.
Content marketing is this slow sort of burn. And I was in my early 20s. I'm like gradually learning how to write and how to build an audience and how to make connections and how to uncover topics that people actually care about. And so by about 05, 06, like the blog is getting some traction. I start to get some invitations to speak at events. There's very few SEO blogs at the time.
Right.
Maybe a half dozen that anybody could name. Probably not even, maybe 3, And so the industry is just tiny, and it is viewed with incredible derision and suspicion. Like, you remember, but most people today who practice digital marketing think, oh, SEO has been a staple and a pillar of digital marketing for a long time. Of course, it's a, tried and true practice. It's something that's, thought of as just part of marketing.
Yeah.
They don't remember that, SEO is considered this black hat, spammy, scammy, scummy practice for probably a decade and a half, from like 95 to 2010. You had all these, is it, are you doing white hat SEO or black hat SEO? Does white hat SEO even exist?
Yeah.
All these software engineers would argue that like no one should actually do SEO because that's manipulation and you just have to let Google do what they want. It was weird times. So that is how that blog started, and it became a consulting company because the demand for our business shifted as the blog took off from web design to SEO.
So that's interesting. And I'm glad you're reminding me about those early days of SEO, because of course I do remember that, but it's easy to forget, and it's hard to think of it. I can't think of an example of something today that falls into that category where, it's something you kind of, is important, but is being just derided by, by the general.
I think there's a little bit of that perception around influencers and influencer marketing.
Okay.
But it doesn't have that scam sort of perception, and I think it's the career that the highest percent of high schoolers say they want. So that's very different from SEO.
Yeah, that's right. That wasn't what it was like for SEO. No, not at all. Not at all. So I'm glad you're reminding me of that. I feel like with, in the early days, there was also just a lot of confusion around what was going to be productive. There'd be a lot of arguments, and the technical side won out often, just again and again and again. And probably because it was, there were opportunities for the technical side to really shine with minimal effort in a lot of ways. You got the tags right. You did a few things, technically, and maybe that really seemed to correspond to great results. I would say now that has really, changed. I mean, to me, it's all about content-driven SEO. Almost every site. It's rare to find a site that, in my opinion, that has technical, there are technical things you can do to it to really boost its ranking. But I don't know if you disagree with that or.
Yeah. So my sense is, let's see, in the SMB world, you are absolutely right. Most small and medium businesses, most e-commerce shops, most companies out there, they're not going to see much of a needle move. But if you're talking about, whatever it is, the global 5,000, oh my God, absolutely, right?
That's true.
They make some technical changes. Walmart makes one tweak on their site, traffic goes up 7%. Their quarter-over-quarter results skyrocket.
Right.
They're ranking better next to Amazon. Absolutely, no doubt about it. Poor Tim Resnick, who I think runs their SEO team, who used to be at Moz, he's got a lot of a lot of heavy lifting to do.
Yeah,
But you go to whatever tiny website selling Japanese earthenware clay pots for rice cooking, to hipster chefs like me. Well, yeah, they're not going to get a ton by messing around with their title elements and their, indexation issues and that kind of stuff.
So to get back to your early experience with Moz, one of the things you said, which I really like, is how you had a different approach within the industry really from the beginning, and I think that that's so critical in business to find some differentiation. And so, you said, your differentiation in one of them in the early days was you were transparent. You wanted to get the information out there, and that really went against the grain. You got some hate mail, and but it also led to people asking you for consulting services. Is that right?
Yeah, I mean the reality was that a lot of the industry insider, other SEO, influencers, before that was a word, those folks did not love what SEOMoz was doing.
Right.
They did not like me blogging about stuff. Google, right? Matt Cutts was the head of the web spam team at the time, and he really did not like a lot of the stuff that we were publishing. I had plenty of messages in my inbox, like from him saying, like, hey, cut it out, man. That kind of stuff. So yeah, I would say that transparency made some enemies, but enemies is the wrong word, right? Because these weren't people who, they consistently were angry at or hated us. They were just like pissed that our blog revealed this thing that they had been using for their clients, and now it was no longer secret sauce because lots of people had read it. And but what it did is it built up an audience of people who trusted us, right? They trusted SEOMoz as a place to learn. They trusted us as a source that wouldn't steer them wrong. They trusted us to be transparent about what worked and didn't. We would own up to our mistakes. When something we'd written last year no longer worked, we'd blog about it. So I think that trust building, that's what really created the demand. And that philosophy, which is where the name comes from too, right? Moz, the name we shared in common with the Mozilla Foundation and DMoz, the Open Directory Project. And at the time there was MapMoz, which was like an early attempt at Google Maps, what Google Maps is today, and Chef Moz, and all these different Mozes out there. And we were building a lot of the foundation for a great software marketing engine unknowingly.
Right. I see. So, okay. So let's talk about your progression as CEO. So you were CEO of a consulting company that was kind of growing underneath you.
So technically, this is oddly enough, I was the chief consultant. I was the blogger, but my mom was CEO.
Oh, okay.
Yeah.
Okay, interesting.
So she had been the CEO. I mean, she had been the only employee too since 1981.
Okay, I see.
1981, probably the oldest SEO business out there, right? But my mom had been CEO of this company, her consultancy, from 1981 all the way through. I dropped out of college, started working with her, and she remained CEO until 2007 when we raised our first fundraising round. Right, we had built this early sort of software, just a set of tools in I guess late 2006. And then in early 07, we launched it. By the middle of that year, like June, July, it was already doing as much revenue as the consulting business. Like people were just PayPaling us every month. I think it was $39 or $29 a month. But we had, hundreds of subscribers all of a sudden because so many people knew us, liked us, trusted us, came to our website. And there weren't a lot of SEO tools that you could subscribe to.
That's right.
In fact, there was almost none. So when our investors basically came to us and pitched us, which is very unusual, and they said, "Rand, we want you to be CEO."
Yeah, I will say as a CEO at a similar time period. I was a few years later than you when I founded my first company. I chased down investors. I would have loved it to have them knocking on my door.
Well, at the time, Will, I absolutely was, I was so excited about it.
Right.
I was so, I don't know. I felt like, oh my gosh, maybe I'm one of the Silicon Valley style, tech entrepreneur elites. Maybe I can be, the next. There was no Mark Zuckerberg at the time yet, so I was like, oh, maybe I could be one of these Bill Gates type characters, and maybe I'm, whatever it is, not realizing how terrible the odds are for venture-backed companies. And there, again, the venture scene was a place where the information that's available now to an entrepreneur online in seconds, pretty difficult to find, right? Yeah. Difficult to understand the whole venture scene. So all I knew was really important rich people think I'm important and want to put money behind me. It's a great day.
Yeah. So you there was really no chance that you would turn that down. You saw it as a great thing. You were excited, and you just kind of said, "Let's go for
it." Yeah, I think I was so for several years. I had felt like I was not good enough, important enough, didn't belong in tech, that I was like scrounging for any type of reputation, that my, SEO, being in SEO put sort of like this almost scarlet letter, right, on me versus other tech founding CEOs. And that carried through for a number more years. But I felt like this venture investment, if this company, if this firm puts their money into us, that will validate that I'm a serious entrepreneur, that we're a serious business, that Moz is like impressive. And so, I really, that allure was just unmissable for me.
Yeah.
I kind of fell into the hole without doing all of my research. And I will say, even in retrospect, I think I would still, knowing everything I know today, I would still take that first round of investment.
Okay.
I just wouldn't have hopped on the venture train as hard as I did.
Yeah. So, I was going to say, what would you say to a young entrepreneur today who's in a similar situation?
Oh man, I mean, you can learn so much by talking to people and by researching this, right, and determine if venture is really the right asset class for you. I think it's wrong for 99.99% of entrepreneurs. And I would caution almost everyone about raising venture for your first company. I think venture is great when you're already rich. Yeah. Like if you've already made your money and you've know what the slope sort of looks like, and look, hey, I want to take a high risk, high reward bet. Fine, no problem, right? Go for it. But you mentioned like this is a very weird thing, Will, that a lot of my friends and colleagues, probably even yourself, like have considerably more assets than I do. So and they're always like, wait a minute. You built a company that was doing $50 million in revenue a year. You owned 20+% of it. You still do. What am I missing? Like, why are you making like what a software engineer makes, in their first few years out of college? I don't get it. That doesn't make sense. And it's like, the mechanics of venture are difficult to understand. Yeah. But basically, until or unless Moz has an exit, which looks decreasingly likely because it's sort of plateaued in terms of revenue and, new leadership has really struggled. My net worth, technically on paper, is a lot. And actually in the bank, it's very tiny. Right? When I left Moz, I started SparkToro the next day, like the day after I left the company. And people are like, oh, well, why didn't you take some time off? You were just so excited about it. Like, no, I needed healthcare and money. Like I had to get going.
I would say that if somebody's considering venture capital, they need to evaluate what their goals really are. If you want to build a massive company at huge scale with lots of employees, probably, then venture capital could help you do that. There's no way. That's really what it is. It is all about, fueling that growth. There's no secret about that.
And fast, right?
And
the whole idea
exactly.
is as fast. They want you to either fail or become, whatever, Google, Facebook, Amazon, as fast as possible. So it's a lot less about the will you get there, right? If you want to build a giant company and you are willing to wait decades to do it, don't do it venture.
Yeah.
But if you are comfortable with hey, in 7 years, maybe 10 years, can I get to the scale of whatever, WeWork or Uber or Airbnb, venture is probably your asset class. Just know that you're sort of it's about a 1 in 500 to 1 in 1,000 bet.
Yeah. Yeah, I agree. The other thing I hate about venture is the distortion that it really creates, where, even hearing what you just said about Moz, you own 20% of Moz, and it seems increasingly unlikely that they're gonna turn it into a saleable asset.
Right.
It makes no sense to me that a company with as good a brand as Moz can't get flipped for a good amount of money. Not saying that flipping should be the ultimate goal, but it seems very doable. So I can only guess that the venture backers have so much money that is it just a rounding error for them?
Yeah.
So they just don't care. But I can't get my head around how, out of the goodness of their heart, they wouldn't just put some CEO in there who could, and give them the freedom to do something interesting, sell it for 50 million or however much, and maybe break even for them and make money for others.
Yeah, I think that, the reality is that the logic for them is essentially like, hey, we have, I think Moz's 2 investors, Ignition Partners and Foundry Group, have $300 and $500 million funds respectively.
Yeah.
And their goal is to return 3 to 5 times that over a 7 to 10 year horizon.
Right.
Moz has already sort of fallen outside of that horizon because of when the investment was made, or it's about to with Foundry, I guess. And so the story there is essentially, it's already kind of in the documents, been written off.
Yeah.
And the funds that put money into Moz, the year funds from Foundry Group, at least, they were in the same fund as like Fitbit and SendGrid and a couple other companies that IPO'd. Those funds already made their returns.
Yeah.
So Moz is kind of like, for Foundry, it's sort of like it's kind of hanging around, dead weight. Like, can we make there be fewer board meetings and just have it take less of our time? Because it's just not the rocket ship. So it's not interesting. So the amount of care and attention it gets is however much really the CEO wants or doesn't.
Yeah. That's the thing about venture that I really can't stand, is that whole distortion. I understand the motivation for the rocket ship and I understand all that. And similarly, I understand why they no longer care about a company like Moz.
Yeah.
But that, it bothers me. I think it's like,
they care, but not
enough to do anything.
Yeah, not enough to like force something, right? And,
right.
And it's quite odd, because the flip side of that is when a fund isn't doing well, and the investors are like, hey, we need to eke out every penny we possibly can. You can get into a really nasty scenario where the CEO is like, hey, we're doing well, we keep growing, everything's fine, and they're like, no, you need to sell. We need to get this offloaded right away, and that can go ugly as well, or leadership can be replaced, that kind of thing. So
I don't know which scenario is more common, but I have experienced that scenario more. I've seen far more. VCs will go into a good company, and then they will set targets that are 20, 50, 100% higher than maybe they should, and that then that creates this cycle of selling and spending too much on advertising and doing things that are not sustainable in certain ways. And I think that is that's equally problematic.
Oh, for sure.
Yeah.
For sure. In fact, in my perspective, right, this is how venture capital in the marketplace warps so many things in sort of digital marketing. You get a ton of companies that are willing to spend ludicrously unprofitable amounts of customer acquisition cost because growth is the only metric that they care about.
Yeah.
Right. So WeWork is a great example of this, right? Essentially, they're willing to lose billions of dollars a year spending on office space and then renting it out to people like, you and I, and essentially as a loss.
Yeah.
Right. And it really is, hey, we lose money on every customer, but we make it up in volume. And when you think like, wait, how does that make any sense? The reason it makes sense is because venture capitalists are hoping that you look like Amazon, right? 20 years of no profit, of losing money, and then boom, once you own and control the market and become sort of a near monopoly in the space, then you sort of jack up your rates and you get your efficiencies of scale and you own the market, and now everybody's rolling in cash, right? And they're willing to have lots of companies look like Amazon and then fail even at spectacularly large scale. WeWork is a great example of this. Uber is a pretty good example of this, and Lyft too, right? Where they, the promise was it was self-driving cars by 2020. Maybe 2030. Who knows? 2040. It'll be fine.
Yeah. Airbnb could be another example in some ways. They've now that said,
I mean, Airbnb makes money though.
Yeah.
Right? They're technically. I think they're the one you point to and go, oh, the model can work.
Yeah. Yeah. They went through some bumps, and but the model can work.
Yeah. Absolutely.
Yeah.
And there's a number of other players that are like that, right? I think Shopify is a good example of this that has done really well with it. There's a good number of mid-range venture-backed companies that I think have done great. I don't know if you saw yesterday, SimilarWeb filed their IPO. Yeah. That looks pretty solid to me, right? Like impressive growth, really good customer acquisition costs. They're technically spending more money on sort of marketing and sales and data acquisition and stuff. But you can see how very quickly after an IPO, they could turn that into quite an impressive story. So, I mean, some work, some don't.
Some do. And I don't want to bash the whole industry. I think that you do see, though, a lot of examples of companies kind of die because they probably shouldn't have ever gotten into venture capital. And then you see other companies where, maybe they could have done well with venture capital, but they don't. It's still a problem. So that said, going back to your experience, so what was it like running Moz as the CEO when you maybe during the honeymoon period you got the money in the first round of investment? What was that like? Did you like it?
I mean, I would say I loved it. It was a really exciting adventure. It felt like I don't know, every year was better than the last. We were hiring, we were growing at this, incredible rate, 100% year over year. We managed to maintain profitability, which very few venture companies do, but our investors were supportive of that. Early investors were supportive of that. For 7 years, as CEO, it was kind of this dream. Like,
wow,
come true in a ton of ways.
7 years.
Yeah, nice. The last year was both it was very stressful. Things were still technically going quite well. So I think it was stressful because I was depressed, right? I was in a bad place psychologically and mentally and emotionally. And I would say that was probably less a result of how the company was actually doing and more a result of just how I was feeling internally. But certainly for the 6 years before that, I was loving almost every minute of it, up to about maybe 75-ish people.
Okay.
I really, really, I loved my team. I felt like we had this very special relationship with each other and with our customers and community.
Yeah.
It was cool. It was an exciting
Yeah.
adventure, especially as like a young kid, right? I basically started the company, started the blog when I was 21, 22, wow. And then was CEO from 27 to 35, something like that, right? And then stepped down, and as I was having that bout of depression, I talked to my investors, stepped down, promoted my longtime chief operating officer to CEO. I remained chairman of the board, and then then things got real nasty over the next few years.
I see.
The growth slowed down over the next couple of years. There's a lot more conflict at the leadership level. She and I disagreed about a lot of things, and
the CEO,
the new CEO, right? Yeah. And that it led to layoffs. I think Moz did a big round of layoffs in 2016 or 17, something like that. And then eventually, I negotiated my departure, which was like a year-long legal battle, just terrible. And I wrote a book, about kind of the whole thing, which I think you've seen, Lost and Founder, and that was published like right after I left. But even that was kind of a fight and a story, right? The Moz leadership and board knew that I was writing this book, and they were like, well, we're really nervous about what's going to be in there and what it's going to do to the company and yada, yada. And are you going to throw us under the bus? And there was a, part of their legal request for me departing and my severance was like, we want to see a copy of the book before it comes out and be able to edit it. And of course, Penguin Random House, my publisher, was like, fuck no. They didn't use that language, but so that eventually, lawyers got involved, and just the whole terrible fart noise is about the best way I can describe the final year there.
I understand. So, I want to maybe dig into kind of what you think changed in terms. So the person you promoted to CEO, is that the one who stayed CEO after you left?
Yeah, she's still there. She's Sarah's still the CEO. Yep.
What was she one of your people, or was she one of the VC's people?
No. So Sarah and I had been friends through a mutual friend, I think at the end of college. And then she joined early SEOMoz. Well, sorry, I guess late SEOMoz, but early Moz, right after our first funding round. So right after I became CEO, she joined, and then we promoted her to chief operating officer. She had been a lawyer before that.
I see.
In family law, contract law, that kind of stuff. Okay. So not
interesting.
Not really a direct connection, but regardless, right? I liked her a lot. She's super talented. She was an amazing COO, absolutely amazing. Just did a fantastic job. I could not speak highly enough of her as a partner in the business and part of the leadership team. Just excellent. So I felt really good about the decision to make her CEO. And then, I think, who knows, right? Yeah. It's very difficult to say what changed or dynamic. Yeah. I'm sure if you were interviewing her, she, maybe if she were being her honest self, she would say she felt like decisions that I made were responsible for the slowdown in growth and the challenging situation that she was put in, and maybe she didn't feel supported. And
right,
I don't know, right? Like that. Those are. I always try and be charitable when I think about it, especially because Sarah and I were like best friends for a decade too. Wow. She was the officiant at Geraldine and my wedding.
Wow.
We went on vacation with her and her husband and their son. And we, did all sorts of stuff together. Like, we babysat her kid, and I mean, just
Wow.
really close. Like,
So it wasn't. So it obviously wasn't a personal problem, a personal dynamic that was the problem, really, at least initially.
Yeah.
So that leads me to the other point you made. So sales were great, growth was great, and then growth slowed.
Yeah.
So then obviously at some point there was a strategic decision that was wrong. Like that
was mine, right? That was my strategic decision that was wrong. Absolutely.
What was that?
In 2012, we raised this big round from Foundry Group. I think $18 million. So we'd only raised 1.1 million before that, right? So this was big, big second round in 2012 after no funding since 2007. With that round, my thought was, the SEO world, the SEO market potentially isn't big enough to build an IPO-able company. Proved wrong this year by SEMrush, right?
Right. Yeah.
But I was concerned about that, right? And I think most of the VCs I was pitching, I mean, this is another bias that I really dislike. I love the SEO world. I thought it was big enough. The venture capitalists I was pitching disagreed. They were like, SEO is a tiny niche. You'll never build $100 million company in that field. Like, it's impressive you got it to 30 or whatever it is, but it's just not gonna get there. So what are you gonna do, right? And so I put together this pitch that was, hey, Moz is gonna become, a market. We're gonna use our market leadership in SEO to enter other digital marketing practices, online PR and social media marketing and content marketing and all these places. And so we're gonna build products that sort of service as this suite where you can do all these things.
Yeah.
Kind of like HubSpot did with CRM, website, analytics.
That's right.
That was a little bit the pitch there. And that obviously super strategically wrong, especially because tactically speaking, we did not have the engineering leadership, talent, tactics to be able to execute on that. And so once we started trying to build, 4 different products for 4 different markets, we diluted our brand. We turned off a bunch of customers who just wanted SEO software and drove them to competitors, SEMrush and Ahrefs primarily, but plenty of others too. And you can really see it, right? So in 2014, when whoever it was, Search Engine Land or SEO Roundtable, somebody would run a survey. Which SEO tool are you using? And it was 50% plus Moz, and then everybody else below that.
Yeah.
Fast forward another 4 years, whoop, it flips, right? Yeah. Moz is 20%, SEMrush is 40%, Ahrefs is 30%, and Moz is increasingly a smaller and smaller share of a growing market. We did it at the worst possible time because SEO never grew faster than it did from probably 2015 to today. The field has just skyrocketed
completely,
and our timing was too early. We had our focus on that market, and then expand to others just at the wrong time.
So when the VCs were saying that there's no way you could get to 100, growth was still good, right?
Oh, 100% year over year.
As see right there, it's hilarious. I mean, so as somebody who was outside, and I wasn't in the industry, I was in another industry at the time, but as somebody on the outside of Moz, hearing about that, what it sounds like you're saying is growth was great and it was easy. I mean, I've been a part of companies that struggled to grow, and you sort of take for granted sometimes when you're with a company that's growing easily. And so it's funny to me, anytime, if any company that easily gets to 50 million, there's 100 million there. There's a $100 million market. You don't easily get to 50. Or even 30.
There are a lot of people on Sand Hill Road that I would like you to have conversations with. They will strongly disagree.
Yeah, I don't think they would. Yeah, they're not going to listen to me. That's for sure.
Yeah. Or me.
Yeah.
Once I wrote Lost and Founder, right? Essentially, all these people were like, "You're going to burn your bridges with every venture capitalist." I was like, "Yes, that is the idea."
Yeah. Yeah, I'm sure though they have very short memories. So that's the other thing that that
This is also a fact.
yeah it feels like you burn your bridges, but you could get meetings with any one of them.
I probably could. You're right. I have gotten some outreach,
I'm sure
for
you have.
SparkToro, right? And I reply with basically hey, if you're looking to use SparkToro for your portfolio companies,
Yeah,
like, great, I'm happy to be a resource, happy to help. If
I
you
will.
are thinking maybe SparkToro would like funding, here's this blog post and go F yourself.
I
Not that mean, but
yeah, yeah, you should be though. I would say though that the a lot of I think everybody has had the idea of talking to a VC and then getting them to help sell to their portfolio companies. I would say that almost never works. It works sometimes,
yeah,
but
I mean, we've had, and
yeah,
we've had a few people who've been like, oh yeah, we internally, I think the Andreessen Horowitz team like signed up for an account on SparkToro and they use it for their portfolio companies and I think
that's
to
cool.
investigate markets and stuff. And it was like, great, fine. You're not my favorite people. I don't love the philosophy that you present, but I do love early stage companies and helping them. And I want more new companies to succeed. So if you're going to help those people do that, wonderful, right? Like I appreciate that application, and maybe you'll improve your economic politics in the future.
Yeah. So okay, so I want to jump back again to your early career for a moment. So you started with a consulting company. Now your mom was the CEO. Was obviously there was a different dynamic. It turned into a software company. And how quickly did you realize that you didn't want to be CEO of a services company?
Gosh, I mean, I think it was a little less, I don't want to be CEO of a services company, and more, we accidentally stumbled into this incredible business. Right. So what had happened was we had this services company. I liked it. It was doing okay. It wasn't growing very fast. It was, profitable enough that we were like making some money, but I think I was making $36,000 a year. Right. So like, very, very minimal salary. Granted that, that maybe that's the equivalent of 45 today or something, but it was challenging, very challenging to scale, especially because we had built a little bit of a brand of personality, like with me as the face of the blog and the company. And so as a services business, this is really bad because every client, of course, wants to work with me, not the team that I'm building. So that was problematic. But yeah, when we launched that software, we had no idea. Like, the reason I wanted to open source the tools for free.
Yeah.
Right. And Matt, our developer, was like, our servers will get overwhelmed. We can't afford it. Like, there's no way. Sorry. And I was like, well, what if we put up a PayPal paywall? And he's like, all right, let me see how easy it is. And he's like, okay, this is pretty easy. I'll just set that up. Yeah. He built it like over the holidays, over December holidays. And then we launched it in February. And it was like, just like rocket ship up. And we kind of looked at each other like, whoa, holy crap, this is amazing. And then, Matt, before we raised the investment, he was like, I don't really want to work at a software company. I don't want to be here. So he left.
Okay.
But, then we kind of grew the team engineering wise and double down on it. But it was a little less like, I don't want to run a consulting business, and more, holy crap, this software as a service, which, I didn't even know the acronym at the time, is just incredible. Like, it just keeps growing on its own. And the growth mechanism was, if I blog more, we get more customers. So like, oh, I can do that. Yeah.
Okay. So that's interesting. The where I was going to head with that was, there are many software companies that do have a professional services practice, and they kind of divide them, generally speaking, and have different people running different things to try
we did too.
Okay.
And in retrospect, I for many years at Moz, I actually really regretted getting rid of it. This was another decision driven by venture.
I see.
So essentially, I went down to Silicon Valley and I was pitching for like in 2009, 10, 11 into 12, I was going maybe, I don't know, 6, 7, 8 trips a year, going, pitching, meeting people, getting intros, all that kind of stuff. Exhausting work, but, and very, oh my God, what a freaking boys club it is down there. Like it is.
Yeah.
It was very messed up at the time. I hope it's gotten better, but I don't think it has.
I don't think it has.
I cannot even fathom what it would have been like if I were a woman, like a single woman going down there and trying to do the type of networking. It was ridiculous. Anyway, so doing a bunch of that, all the feedback was, well, you sort of look more like a services business to us. And I was like, services is like, we're doing $1 million of services revenue and $4 million of software. Like, we're obviously a software business. And they were like, are you? I don't know. You seem like a services business. We're not going to invest. So I think 2010, we just dropped. I was like, we're done. We're out. I'm dropping services completely. We're going to kill that whole business unit. We're going to take the $1 million hit. I don't care. Like, we're out because I need the venture capitalists to believe in us.
Yeah.
Oh man, Will, why did I care so much about them and so little about my customers?
Yeah.
Yeah.
I hear you.
That's the story.
I hear you. Okay, well, I appreciate you sharing that. I can relate to that a lot. With my first business, I thought that it was either, succeed with other people's money or fail. That's what I thought. And the fact of the matter is that's the furthest thing from the truth. You can, the best way to succeed is to keep control of the company and generate revenue by making people really happy in some way.
Yes. Oh my God. And I mean, I think about all of the time and energy and effort that I put into building relationships with and delighting and trying to convince these investors and potential investors almost exclusively, right? Hundreds of potential investors that turned into 2 actual investors, and one of them I already had, that they should back me. What if I had taken 60%, 50%, 20% of that effort and put it into customer development and like making our product better and building relationships with, I don't know, software engineers and product people and designers and developers who could have made our company better.
Yeah.
Oh,
it's shameful.
It crushes me. And you know what? This is the beautiful thing about SparkToro. 99.9% of the effort that I put into the company is either improving the product or improving my relationships and reach with customers.
Yeah.
I freaking love that. I love the freedom to concentrate on the people who really matter to the business. That is such a beautiful gift that you get when you don't raise institutional capital. And SparkToro has raised money. We raised 1.3 million. We technically raised more than Moz raised in its first round, but we raised them all from people like you.
Yeah.
Like it was all, owners of agencies and consultants and like people who said, oh, I really want that product to exist. This sounds super exciting. I believe in you, RAND. Like, here, I'll put in 25K, 50K, that kind of thing.
I would love it if I was included on the next round of SparkToro capital. But
I have bad news. I mean, good news and bad news. The good news is I think we'll never need to raise again.
I'm pretty sure you won't. Yeah.
But the bad news is I think even if there were some opportunity there, like Casey and I are very strongly biased against what's the Reid Hoffman book? Blitzscaling.
Yeah,
right?
sure.
Like if there was an anti-blitz scaling, like a slug scaling.
Yeah, that should be your next book.
Yeah, I freaking love the slow and steady and profitable and build what customers want and focus on delighting them and build a great team of people around you, slow and steady.
What's the ideal size in terms of employees for you? How many for you to be actually CEO?
I don't. So Casey and I sort of agreed. I'm not sure technically in writing, but I have it in my notebook, from our first early meetings that we he never wanted a company bigger than 20 people, and I never wanted one bigger than 50. So somewhere around there.
Nice. I would have guessed. Yeah, that's what I would. And you liked being CEO up until about 75 employees at Moz. You were still having fun.
Yeah, it really, it felt like that sort of special environment of everybody knows everybody. There's a lot of social cohesion and kindness and forgiveness and benefit of the doubt giving. And, it's not, engineering screwed this up again.
Yeah.
It's, let me go talk to Ben and Nick and see if they can fix this.
Yeah.
Right. So, and there's such a huge difference between those two things when it's like marketing views product in one way, finance views customer service in one way, as opposed to, whatever, Rebecca thinks about Tara in this way.
Yeah. Yeah. Do you have any advice that you like to give do you have a standard piece of advice that you like to give to new CEOs or to just people who are growing in executive leadership?
Yeah, I mean, I think there's a ton, right? Like every chapter in Lost and Founder is kind of a different big lesson along this route. But I think a huge portion of our journeys as founders and entrepreneurs is driven by the external culture around us, right? It's which, who are my entrepreneurial heroes and why do I idolize them? And what do I think will fill sort of the hole in my chest that's been left by my upbringing and my culture and the society around me and the press that I read and the content that I read and the people that I follow. And I think whatever you want to call it, like hustle culture in entrepreneurship has biased a ton of people to believe things about why they need to be successful in very particular ways. And if you can break those chains, if you can think for yourself about why you want what you want and what you truly want and don't, and you don't let anyone else dictate that becomes a superpower.
Yeah.
Right? Then you can truly say, I want to raise venture capital because I like high risk, high reward. I am happy to be one of the 499 companies that doesn't succeed, that sort of has a terrible time over the next 7 to 10 years. That doesn't bother me. And if I'm one of the ones, that's great too.
Yeah.
Okay. Now right, that this is for you and you can go do it. And if that sort of model isn't for you, you can go figure out what is. And I think the beautiful thing about the world today is there's so much capital floating out there in so many different kinds of ways that you can, a buddy of mine, Kane Jameson, just raised from Earnest Capital, right, which has this really unique model that's great for certain types of I don't want to say slug scaling because I think they're growing faster than that, but like the inverse of blitz scaling. And there's just a lot of opportunity out there to do different kinds of things. I don't think you need to be constrained by what's come before.
What does it mean to have open source documents for your business?
So I think I might have mentioned to you, Will, right, that we open sourced our investment fundraising docs for SparkToro.
Yeah.
So the incorporation papers that we used to structure and get everyone's signatures and all that kind of stuff. And what I mean by open sourcing that is we just paid our lawyers for a few extra hours of time to remove all the names and include open fields that you could plug in yourself as an entrepreneur or a founding team and essentially save yourself the hassle of custom building your own structure if you like SparkToro's fundraising structure. You can change the numbers to be whatever you want. Here's the pre-money valuation for us.
I see.
Here's the pre-money valuation for some other company. You can change how many people are investing and how much they're investing and all that kind of stuff. You can change, obviously, your name and address, blah, 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 blah. But the short version, which I think it's 3 or 4 different companies have used modified versions of our investment docs now. So they basically downloaded those open source docs, use them to pitch and fundraise for their own businesses. And the Tiny Seed Investment Fund also uses a modified version of SparkToro's funding structure for all the investments they make too.
I see. Very interesting. So, and why was that important to you? Is it just consistent with your philosophy of transparency and being generous with content?
Not so much that. It's a little more philosophically aligned with one of the reasons that I started SparkToro the way I did, which is that I have this fundamental hope and belief that a venture capital backed business and the classic VC sort of angel funding route is fundamentally broken for most businesses. It's not the right structure for most companies. Many companies that need to raise money use that process and then fall into the trap of believing that they have to sort of, either be the rocket ship that reaches $1 billion or die trying. And I don't believe that is the only way to make money as an entrepreneur. And I don't believe it's the only way to make money as an investor. And so SparkToro is an attempt to try and get people to think differently about that. And that's where the philosophical idea of like, let's open source our docs so other people who might be inspired by us can follow in our footsteps and do this sort of creative fundraising.
I love that. Yeah, I think that's awesome. And that kind of gets to what we were talking about earlier about the, just the problems with the VC model.
Yeah, man. I mean, look, I was reading sort of an investment philosophy from a SparkToro investor, one of SparkToro's investors and a good friend of mine, Dharmesh Shah, one of the most successful angel investors out there. And by successful, I mean purely financially successful. I don't know if he's actually accomplished the things that he wants to accomplish by angel investing, but I assume money is one of them. But he was pointing out like, hey, if you want to be successful as an angel investor, you have to only invest in companies that can be $1 billion or more, because you're going to have 1 or 2 20x returns to make up for the 40 or 50 failures that you put in. You need to fund a huge number of companies, fund them quickly, jump in right away. It's like, I don't like that philosophy at all. He was pointing out like, if you think a company is going to be long-term profitable, successful, have a very low likelihood of dying and failing, you shouldn't put your money into them.
Yeah.
Breaks my heart, man. Like, what a terrible way to do capitalism. Right?
Yeah.
The only way you can be successful as an angel investor, Will, apparently, is to basically be like, how can I personally contribute to income inequality and making sure that for every 100 people who try, only one succeeds?
Yeah.
You can make that the demo reel for this the promo for our conversation, Rand.
I like that. It's so true though. It is. I mean, I've heard different versions of that. I remember when I first started raising capital for my first software company, it was, the whole question was, well, should you even be asking for capital? Can you get to $1 billion? Can you do, are you, if not, why are you here? And, it's like just right, that was kind of like, just sort of question number one. And it gets you thinking in the wrong way. It got me thinking in the wrong way about, well, let me think through my numbers, because I ought to be able to be $1 billion company. And, when in reality, there's a lot of options. There's a lot of ways to grow and fund and all of that.
I mean, I think the wildest part is my perception is you have a lot more of an opportunity to become one of those unicorns if you survive for a long time and thrive and keep growing than if you aim to be a rocket ship or die trying.
Yes.
Right?
I agree completely.
I think the Canvas and MailChimps and SurveyMonkeys and businesses that take a long time to mature into what they can potentially become are actually really exciting and interesting. And I think that might be the future. Basically, SparkToro is this giant database of public web and social profiles that you can search across and get data about. So meaning I want to know, for example, Will, maybe you want to know what chemical engineers in the UK listen to, which podcasts are popular with them, or you're curious about what architects in Los Angeles, which YouTube channels they subscribe to, or you want to know what words and phrases VPs of sales also use in their bios, or what social accounts they follow. So you can go, whatever, advertise to them, or you can do pitching and outreach, or you want to see what press sources are followed by fiction authors so that you can promote your new material to them. If you have a describable online audience that you want to learn more about, you want to know what they watch, listen to, read, follow, talk about, share, how they describe themselves, their demographics, SparkToro can tell you a lot about those people. And it is not, it doesn't require, a 6-month-long design a survey, find an audience, figure out how to incent them to fill out the survey, account for all this bias stuff, right? Like, this is passively collected data that people have put on their public social profiles on 10 different social networks, whatever, Facebook, LinkedIn, Reddit, YouTube, Quora, Medium, GitHub, Twitter, Instagram. And it is aggregated data, so it's anonymized. There's no personally identifiable information. We won't tell you who those chemical engineers or architects are. But from that data, you can do incredible things. Simplest thing you can do is, hey, my audience listens to this podcast. Maybe I should be a guest on that podcast. Maybe I should sponsor that podcast. Maybe I should do some co-marketing with the host.
Okay, so I'm going to throw out a client name here, because I think this will be a good way to describe how SparkToro might work with an otherwise challenging client. So one of my favorite clients is a company called Shippo. They do, I'm not sure if you're familiar with them, they do shipping software for all types of businesses. And so if you're an e-commerce website and you're shipping stuff all around, you need to print shipping labels. You need to, they can save you tons of money on shipping and all that. And I've always thought that they would be tricky to do PR for, because who's a thought leader in shipping? Like, what do you what would SparkToro do if the PR person was to you? I'm assuming your clients for SparkToro might be, say, like a head of public relations, something like that. Somebody in charge of that?
Possibly, yeah. Sometimes we have, I would say, what's wild about SparkToro is it is used by an incredibly broad set of people. So there's no one audience that accounts for 15% of SparkToro's customers, right? So it'll be like, oh, I do market research. Well, I do digital PR. Well, I'm a a founder of a company. I'm a marketing agency. We do whatever it is. But yes, PR is certainly one thing that you could do. And if you were thinking about it for Shippo in particular, I think one of the things I would probably do is I would look for e-commerce and drop shipping entrepreneurs.
Okay.
Right? People who, they follow accounts in e-commerce startup world. They follow people who or publications for drop shipping businesses and for consumer product group businesses that are in early stage. And I would go, my audience follows the social account. Like somebody in that world that I know well is Eric from Beard Brand.
Oh yeah, Eric Bandholz.
Yeah. So he's sort of, popular with a lot of these types of entrepreneurs who have started businesses like that. And so you might be like, oh yeah, let's see who follows Eric. And okay, they also follow, these sources of influence. This group looks great. Oh, they use the hashtag, whatever. I don't, this is made up, but they use the hashtag like shipping problems. Okay, boom. We're going to look at people who've used this hashtag in the last 120 days. And I see that I can reach them through these podcasts, these YouTube channels, these press sources, these social accounts, these websites. Boom, 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 boom. Right now you got you're essentially marketing strategy there. Because
I see.
instead of trying to figure out like, where can I reach my target audience, SparkToro can just tell you, 17% of people who are e-commerce store founders in the United States follow this publication.
I see. So it's really about mapping networks of influence.
Yeah. I mean, if we were having this conversation 7 or 8 years ago, I would say SparkToro helps you with influencer marketing.
Yeah.
But influencer has come to mean half-naked person with six-pack abs on Instagram.
Fair enough.
So we don't really do that, right?
Yeah.
Most influencers, right? What that word means now, don't influence a specific audience.
Right.
They are not influential among e-commerce entrepreneurs.
Right.
They simply are followed by a broad swath of people who enjoy their whatever sculpted abs or whatever it is, the swimsuit they're wearing, or that kind of crap.
Yeah.
And to my mind, like look, for like 1% of big broad brands in CPG world, like, yes, maybe influencer marketing is kind of the new, let me advertise on TV. But for the rest of us, what I don't care about being in front of 1 million people. I don't care about having tons of impressions. I want to have my brand reach exactly this target audience, right? If I'm Shippo, I want to reach e-commerce founders and entrepreneurs and chief operation officers at these startup and challenger brands.
Yeah.
That's who I care about. Nobody else really.
Yeah. Yeah. Okay. That makes perfect sense. Well, I really appreciate that input on SparkToro. And we talked a little bit last time we spoke about kind of, you're not looking for more funding. You're not, what are your plans for the next 6 to 12 months?
Yeah. I mean, we have a bunch of requested feature development work and languages, a couple of languages that we want to expand to. We're currently very much English language only. And a lot of folks, especially from Spanish-speaking and German-speaking countries, have asked us about using SparkToro. So those are the first 2 languages that we're going to try and have coverage on. And then we have also gotten a lot of interest in people who say, rather than I want to search for an audience, see their sources of influence, I want to track an audience. Like, I'm really interested in all the people who follow our social accounts. Maybe I'm Shippo. Like, show me all the people who follow our social accounts on whatever, Twitter and LinkedIn and Facebook, wherever they're big. Tell me what else they start following. I want to see if there's like some new source of influence that's starting to rise in importance. Tell me if there's a hashtag that they're starting to use that's like kind of taking off. Tell me if there's words and phrases that they are starting to discuss on social that I should be creating content about, that we should be programming our next event for, that we should do a webinar about. Tell me if there's a YouTube channel that's taking off. Maybe we should advertise against that YouTube channel in our Google Ads account.
Yeah.
So all that kind of stuff is currently, if you wanted to do it, you'd have to like log into SparkToro every week and perform the same search and compare the different. We don't want to, like, let's just show you that over time. Here's all the new stuff, that sort of data. I think that will probably end up being a huge part of the platform in the next 6 to 12 months.
I see. Well, what I like about it is, that sounds very actionable, very action oriented. I know as a CEO myself, a lot of, when I first started hiring people, and for this company, I did not take any funding. So it was all, funded out of revenue. And initially it was all about how do you keep people productive and busy and happy, and like how do you make sure that they are empowered to do things that are really useful. And I think finding certain tools, it sounds like SparkToro would fall into this category, it really taught me the importance of a tool, because a tool really can shape people's behavior in large ways. If somebody has a tool for link building, they're going to do link building. Like, they're going to do more of that. If somebody has a tool for putting out press releases, they're probably going to put out press releases. So like really good quality tools that are I think the best tools are ones that are really, they give people, they really amplify their intelligence. They amplify their, the actions that they would be taking otherwise. That's really what I like, rather than say like a narrow tool, like for instance, like a press release distribution service. Like that's,
Yeah.
there's not much to that.
I feel like a lot of tools in PR world in particular. I had a great call this morning with someone who's kind of deep in PR world. And a lot of those tools are somewhat about sort of showing off your ability to make connections and where someone's getting mentioned and talk about, as opposed to, it's kind of that broad brushstroke approach. Like, hey, we'll tell you about these 500 mentions that you got from, the last 6 months of our campaign of working together and trying to get the, press outlets to cover you. And I kind of have this like, okay, if I'm going back to your example, if I'm Shippo and the New York Times writes an article about, shipping and the rise of e-commerce firms, that's not a bad thing. Like, that's probably nice to have. I'd show my grandparents. I'd be like, hey, we're in the New York Times. Are a whole bunch of entrepreneurs and potential customers who need our product going to read that piece? No.
Yeah.
Like, probably not. It's too broad a publication.
Yeah,
any given story
that.
in the New York Times just doesn't get that much play, especially something so niche. Like, that's not helpful. And yet, your grandparents are not going to be impressed that, like, e-commercetips.com, or .info wrote about you, but your customers are like, oh, hey, that's great advice. I got the email newsletter in my inbox, and I'm like, oh man, Shippo with 2 P's. Okay, I'm checking them out.
Yeah.
So, look, it's just a matter of, I think changing the whole thought process behind why am I trying to go out and do marketing on other people's platforms, and why am I trying to build influence in these places? And the answer is, because you think that there's audience affinity and value to your brand, as opposed to, well, I've heard of them and I want to, cut out newspaper and send it to my folks. Two different philosophies.
Yeah. Yeah. Okay. So I've got one more question. I've got a really tough one for you. So you were very open about some mistakes you made with Moz. And, maybe a strategic mistake in, I can't remember what year it was, because for people who are listening, maybe they don't realize that there's been about a week since we taped the first hour. And so
it took that long just to get our cameras working.
Yeah, that's right. So what are you doing now to try to prevent yourself from making a similar type of strategic error as the CEO of SparkToro that how are you trying to learn from some of the mistakes that you've clearly been introspective about?
Yeah, that's a great question. I mean, I think that probably the biggest thing is structuring the business in a way that's very forgiving, right? So let's say that over the next 6 to 12 months, SparkToro doesn't grow at all. Like, it just sort of, it takes us a really long time to figure out our next steps, and we're profitable now, but maybe we're adding a few customers every month, but we're also, a few people are canceling every month because they don't need it. And so the business is kind of just plateaued. The good news is the way we've structured it, that is okay. That is absolutely fine. If we need time to figure out our strategy, to figure out the tactics that work, to wait for, a market to recover, who knows? Maybe there's some terrible thing. God, I hope not. We've had way too much terrible things the last couple of years. But, we can be patient. We can wait it out. And I think that is, that's the biggest sort of structural change that we've made. We don't need to be on that, VC ramp where a year when growth slows from 100% year over year to whatever it was, 60% year over year, which I think happened to me my last year as CEO of Moz. I don't have to sweat that like that.
Yeah.
Casey and I will still be high-fiving at the end of the year if we grow 60%. Like, that's,
I mean, that's
beautiful.
It's remarkable.
That's no problem.
Yeah.
So that's the big one. Tactically speaking, I think another really big portion is I am unwilling anymore to create distance between myself and our customers. Mm-hmm. So Will, I don't know if you're on SparkToro's mailing list or anything, but every email you get comes from me, from RAND at SparkToro, which is my real email address. If you hit reply, I get that email. I answer all of those, every single one, right? I talk to dozens of people every week about how they're using SparkToro, what they're excited about, what they're not. And so I'm just unwilling. Like I know I did this at Moz, right? I created a customer service team with the manager, and they reported to marketing, and that reported to the CMO, and that CMO reported to me. Whew, that's a lot of levels between customer of Moz and founder of Moz.
Yeah.
Not going to happen at SparkToro, right? Like all day, every day, I am just talking to customers and figuring out what they want, and potential customers, right? And folks like yourself, and sort of understanding the market, like, oh, okay, people think about this way. They talk about it that way. I think a lot of like SaaS business, right? Software business is trying to scale so that you, the founder, don't have to talk to customers. You've got a team to... Now you can have a whole demo reel of me just like...
I know, it's perfect. I think that's perfect. Yeah, in case the first one didn't come through perfectly, we've now got it.
What does Rand think of creating distance between himself and customers? What does he think of the venture capital asset class? What does he think of income inequality? Yeah.
I didn't want to say anything when you were doing that. I think that's the one right there. That's the golden. Oh, that's great. I think. Thank you so much for coming on Road to CEO. Was there anything else you wanted to talk about today? Anything we didn't get to?
I mean, one of the things we didn't talk about is team building, because Casey and I haven't built a team yet, but will sometime in the future. I would love to join you and chat about team building. I think this is going to be one of the areas where my previous experience will hopefully help me avoid a bunch of mistakes, but I'll probably make some new ones. So maybe we could have a chat about that.
I'd love to hear about that. I'd love to have you back on. Thank you so much. I know people are going to benefit from all the stories and the wisdom you've shared. So thanks so much for joining us.
My pleasure, man. Great to be here. Wish you and your listeners all the very best. Take care.